Good afternoon, everyone. Thank you for joining us for our monthly international strategy call for February 2023. We wanted to give everyone an update before everyone gets ready for Carnival.
Thank you, Raj. Só antes da gente começar, então, a live de hoje e dar as boas-vindas para os convidados e para mergulhar nos temas, a partir da live de hoje, como a gente tem muitos convidados que falam inglês, alguns em português, a gente vai começar com uma tradução simultânea. Então, na parte de baixo da tua tela, você pode selecionar para escutar em português e a gente está oferecendo a live em português 100% também. But keep going, Raj.
Sounds great. For those that are new, my name is Raj Patel, and I'm the Chief Equity Strategist at Itaú. I'm joined by Marcelo Olson, who is the Head of Global Markets and Strategy, and as always, he will be the moderator for our discussions today. Today, we plan to focus on recession risks. It's been a topic for the last 12 to 18 months, and it seems like it's been the most talked about recession in history. With us, we've invited a few guests, one person from the economic team at Itaú BBA, and our fixed income strategist to discuss this. In addition, we'll discuss briefly the end of earnings for the S&P 500 and what companies are telling us about the economy and their outlook.
Perfect. Thank you, Raj. So thank you very much for the introduction. It's very good to be here again. Today, I'm going to be moderating once again this live. And the idea for the panel today is we brought Raj, of course, as usual. He's going to be overseeing the equities piece, so the impacts of recession for the equities market internationally. We also brought in invite Alejandro Estevez-Breton to be, who is Chief Fixed Income Strategy for the private bank. So we got both a look from equities perspective and also for fixed income. And Bernardo, who works for Itaú BBA, he's a US economist, senior economist from Itaú BBA, also joined us, was very kind to join us from an overview in terms of US economy. So why don't we kick off with that? I'm going to switch to Portuguese, and we do half and half as usual, but you do have the option for the translation. Bernardo, obrigado por estar aqui com a gente aqui hoje. É um prazer te receber. Se eu errei alguma coisa na apresentação, por favor, me corrija, mas se a gente quiser já mergulhar no tema, por que a gente não começa com um pouquinho de cenário, um pouquinho da tua visão, como é que está andando os Estados Unidos, principalmente a economia americana, com um pouco de foco na recessão e quais são os aspectos que você está observando?
Beleza. Bom, primeiro, obrigado pelo convite, também é um prazer estar aqui falando com vocês. Acho que assim, a gente pode resumir o cenário global, né? A gente vinha do ano passado com 3 riscos principais ali para o cenário global, né? Um era a guerra na Europa, Rússia e Ucrânia, que estava associado a um problema de gás na Europa, poderia causar uma recessão por conta disso. O segundo risco era a China, o Covid policy da China, que, bom, enfim, com novas variantes, etc., ainda poderia ser um fator negativo para o crescimento global. E um terceiro fator era a inflação, né? Não só nos Estados Unidos, acho que espalhado pelo mundo, desenvolvidos e emergentes, os bancos centrais reagindo, subindo juros, também era um fator que causa enfim, aumenta o risco de uma desaceleração econômica mais forte, né? Então, o que a gente viu no período mais recente é que os 2 primeiros riscos diminuíram, né? Não que a guerra tenha resolvido, mas pelo menos deu uma estabilizada, o risco de um cenário de gás mais disruptivo ali diminuiu, a China está conseguindo fazer uma reabertura, o terceiro risco não diminuiu, que é o da inflação, né? E aí a gente vê isso, acho que principalmente nos Estados Unidos, mas em alguns países também, a gente não está vendo ainda uma desaceleração consistente da inflação. E olhando mais especificamente para os Estados Unidos, o que a gente vê, assim, o principal risco, acho que para o cenário é a inflação, tá? Continua sendo, já há bastante tempo e continua sendo para esse ano, tá? E como a economia responde ao aperto de juros, né? Eu acho que a gente viu alguns sinais iniciais de desaceleração da inflação ali no final do ano passado, a economia estava mostrando ali um pouco de desaceleração, então parecia ser um cenário mais benigno, mas acho que no curto prazo, os dados que a gente vê é que o cenário ainda é muito desafiador, né? O mercado de trabalho ainda está muito forte, o ritmo da inflação ainda está elevado, Então, o risco de recessão continua por conta disso, né? A gente já está discutindo de novo se a terminal do Fed não tem que ser maior por conta disso, etc. Então, eu acho que, resumindo aqui, o risco de recessão ainda é significativo por causa da inflação. Acho que o risco número 1 para o cenário global continua sendo esse.
Perfeito, perfeito, super claro. Tem até uma piada, né, que corre no mercado, que é os economistas, eles previram 14 recessões nas últimas 3, né? Então sempre tem aquilo de Pedro e o Lobo, vai vir, não vai vir, não vai. Qual é a visão de vocês, seja a tua, seja do próprio Itaú BBA, qual a probabilidade de uma recessão no curto e médio prazo agora, dado que a gente viu os 2 primeiros riscos afrouxando um pouquinho, inflação continua sendo, claro, que é um fator forte, mas mesmo assim a gente viu uma afrouxada da inflação, pelo menos nos Estados Unidos nos últimos meses. Como vocês precificam esse risco de recessão?
Só defendendo a minha classe um pouco aqui dos economistas, porque assim, sempre tem uma dificuldade de você prever choques aleatórios, né? Por exemplo, quando que a gente ia imaginar que o Covid ia causar a disrupção que teve, uma gripe, uma doença ia causar essa disrupção que teve, uma recessão dessa magnitude. O problema é que choques aleatórios sempre são difíceis de prever. Eu acho que assim, o que acontece, principalmente no tema da recessão, né? O mercado em geral, os economistas, o mercado como um todo, sempre fica um pouco ansioso em ciclos de desaceleração econômica, porque normalmente quando o Fed tem que subir juros para desacelerar a inflação, ele causa uma recessão. Nem sempre isso acontece, às vezes ele consegue o soft landing, mas na maioria das vezes ele precisa causar essa recessão, né? Então acho que é natural a gente se preocupar com esse risco, acho que a preocupação é válida e o risco de recessão não é negligente, tá? Ele é razoável por conta disso. E especialmente porque a gente está vendo um cenário de inflação, a inflação mais alta desde a década de 70, 80, entendeu? Então é um cenário muito particular que a gente não pode ignorar o risco por conta disso, né? E uma inflação persistente, que o Fed ainda está tentando entender quanto que ele precisa ir para desacelerar essa economia, desacelerar essa inflação. Entendeu? Então, acho que é um risco relevante por conta disso. O que a gente está olhando, principalmente, para tentar medir assim, o tamanho desse risco e alguma coisa de timing, eu acho que, primeiro, balanço das famílias, acho que é um indicador bem importante, porque ele tem sido um dos principais buffers da economia americana, que tem segurado a economia num ritmo de crescimento razoável, mesmo com o aperto do Fed, tá? Então, assim, condições de crédito, taxa de poupança, etc. Renda, né, também. Dados high frequency de atividade, um ganho que a gente teve na pandemia foi um aumento significativo da oferta de dados, e dados high frequency principalmente. Então, pedido de seguro-desemprego, dado high frequency de consumo de cartão de crédito, etc., tem sido indicadores coincidentes bons para a gente saber para onde a economia está indo, o ritmo de crescimento, e indicadores antecedentes do emprego, né? Porque um dos pontos, né, um dos riscos da recessão é você ter destruição de emprego, né, que é o payroll negativo ali, né? Então, horas trabalhadas, alguns setores que são mais leadings ali, mais antecedentes do ciclo do emprego, que apontam essa desaceleração econômica mais forte. No fim, o que a gente quer saber vamos ver no detalhe ali, no high frequency do dado, em que ritmo a economia está rodando e o que pode ser antecedente disso, né? O mercado sempre olha para a inclinação da curva de juros, mas eu acho que de dados econômicos é um pouco essa saúde, balanço das famílias e high frequency de atividade de emprego. Tá?
Perfeito. Normalmente a gente deixa as perguntas mais para o final, mas entrou uma aqui que eu achei interessante, talvez a gente pode já puxar o gancho. Você citou 3 fatores principais que vocês estão olhando, o que olhavam desde o começo, que era a guerra, claro, toda a situação de Covid, política de Covid na China e a própria inflação. Você vê o conflito, ou possível conflito no tema Taiwan entrando como um risco macro global agora que pode atrapalhar alguma coisa nesse sentido, ou ainda está sendo monitorado, mas não é necessariamente um grande pilar na análise de vocês?
Eu acho que para a gente chamar de risco global, não. Tá? Pode gerar um conflito geopolítico ali, né? Estados Unidos e China, sempre a gente volta para aquele medo do trade war, mas eu acho que para ser um grande risco global, acho que não é o esperado, tá? Acho que é algo para ficar no radar ali, mas não é esperado que cause algum impacto significativo para crescimento global, assim, nesse sentido, tá? E para mercado.
Monitorando, então. Obrigado, Bernardo. I'm going to switch to, so now we have the backdrop, now we have the whole scenario about how the economy is moving, what do you think about what the risks are, and how do you want to play this out in terms of a recession risk? So maybe getting a sense of how do we see this from a fixed income and also equities perspective. I'll kick off with Alejandro, if you don't mind. Market seems to be rallying, at least for the past month and a half, even a little bit more, but definitely 2023 has been a positive year for risky assets. And we can name a few, of course, but I would love to hear your thoughts on the not only price in the recession, but how markets are reacting to the latest data and speeches from Powell and the rest of the Fed.
First of all, thanks for inviting me. It's a pleasure to be able to kind of share our thoughts with clients. Hopefully this is going to be useful for everyone. Second, I think there's a lot of things at the same time, so it's difficult to disentangle exactly what's driving what. But I think the message in general from the fixed income markets over the last, let's say, year, let's say the treasury curve has been an inversion. An inversion, let's not get too technical, is basically that the shorter term treasuries are higher than the longer terms, right? So the curve is telling us that there's a lot of tightening. Conditions for financing and basically the monetary policy of the Fed is making things more difficult, at least temporarily, right? That's what the curve thinks. But that potentially could be a signal or a risk that, you know, things will decelerate and eventually you could have a relatively high risk of recession, right? That's what the curve inversion generally tells you. And it's pretty reliable, right? There's been some, you know, failed signals. It doesn't work perfectly like everything else, but it kind of tells you to be a little bit, let's say, on the warning sign, right? It's a, let's say, an orange light, not a red light. And of course, there could be some distortions, right? Because the central bank has been intervening in this market, right? They've been buying treasuries. They stopped doing so since last year or early this year. So the buying of treasuries could create a little bit of a distortion in this signal. But the question is, shouldn't it be inverting even more? And it did so, right? The curve has been inverting to levels we haven't seen since the 80s, right? So let's say the signal is probably yes, the risk in line with what Bernardo is saying. I think the risk is there, right? Maybe not the base case, but it's a risk that it's relatively high and worth monitoring. I think that's what probably the fixed income markets are telling us. I think the fixed income market has been trying to kind of price exactly what's happening. And I think probably what's happening is from a very high risk of recession a few months ago, it's starting to maybe think maybe what we're getting is a soft landish, right? So the economy will cool, but maybe there's a probability that it can avert recession. That's, I think, what the market is doing, right? This is the kind of the treasury market. There's other markets, riskier markets in the credit space, which are pricing something different. And look, every market prices different things, right? I mean, I think the riskier assets are a little bit more positive. I think they're probably pricing in something like a slowdown, but then a reacceleration, that things are going to be relatively good. If you look in the high yield, which is a non-investment grade, or let's say the poor rated company bonds, what you see there basically is a reacceleration of implied growth expectations, probably since November, maybe even before, maybe August, September. Sort of the growth expectations decelerate to the minimum and they started to kind of reaccelerate even before January. But in January, we did see a reacceleration that was substantial, right? So I think this is consistent with what we're seeing, right? In some of the data, you know, even the jobs data, there might be distortions, right? And Bernardo might be better talking about this, but seasonality and other things. But clearly, it seems the economy is gathering some momentum on the margin. The question is, how sustainable that is, right? So I think markets are trying to adapt to those things. I think in general, riskier assets are more optimistic than the treasury curve, but the treasury curve is still pricing in a relatively, decent risk of recession, which is, I think, in line with what Bernardo said. I don't think the market is completely disconnected with this. So I think that's kind of the basic take.
Yeah, no, That's my view as well, Alejandro. I appreciate you sharing that. So putting that into more of a trader perspective, right? Are we buying? Are we selling? So we have a lot of risk, but at the same time, the opportunity cost is very high, especially rates, at least on an absolute term, they look very attractive. Now, what is from a fixed income asset class perspective, which is the most vulnerable space here, or which asset class would be the most vulnerable in this spectrum, knowing that the opportunity cost is fairly high?
Yeah, I mean, I think it's a great question. I think clearly, if you look at historical relationships, when the economy, the risk here is a recession, right? That the market is clearly not pricing, and the market that is pricing at the least is high yield. So the rates are very high. Yields, if you look at yields in high yield, are very high, above 8%. The question is, the market is very optimistic, right? So if the market is pricing something like a soft landing and then a reacceleration, and therefore implied default rates are very low. But if the market is wrong and there's a hard landing, a recession, and a protracted, let's say, slowdown that leads to a rebound maybe in 2024 or something like that, then you're going to see a lot of defaults. So I think that's probably the market that's more vulnerable. It's very optimistic, but it has a very good carry, right? So yeah. I guess it's hard. It's not entirely easy, right? In a way, I mean, if that's your view and you think as a base case that the economy will do okay, you're probably going to be okay, right? But I guess the downside is huge if the economy does decelerate and that there's a recession, right? I mean, I guess you can have more losses there in terms of defaults, and maybe the 8% is not going to protect you as much. So you could have even better yields at some point, right? I think that's kind of the more vulnerable part. I think, S&P and high yield have both repriced over the last few months. And I think especially January, the implied growth of, sort of expectations are relatively better than where they were 6 months ago. So I think, yeah, high yield, I would say it's more vulnerable. And in general terms, I mean, I think, just being more defensive, if you want to be defensive and you're concerned about recession, being at the very short end of the treasury curve and even, some part of that is very, very safe and you get, good returns might make more sense, right?
Understood. Even though there's also the discussion about the high carry, right? The higher carry. So in a portfolio sense, it might be a more complex situation, but definitely a vulnerable asset class. Raj, do you mind if we move to you towards equity space? How's the equity markets reacting to again, so much has been said about data dependency, but at the same time, we can see cyclical shares outperforming defensive. So the market seems to be risk-taker right now. And also just because we went through the earnings announcements just for Q4 last year. So a bunch of CEOs and CFOs also lay down their forecast for 2023, which can carry a lot of information as well. Do you mind sharing a little bit of that with us?
Yeah, I mean, look, the equity markets have, repriced higher as, we started the year. I think investors were generally a little bit more cautious, worried about the outlook. But as the data has come out, and I know, Bernardo and Alejandro have discussed this, the economic data seems to be pointing to a actually pickup in consumer spending, and the jobs number, I know, which is lagging, is still showing strength. And then the inflation numbers, initially showed better numbers in January, right? So I mean, maybe the more recent number maybe has some noise in it, but the equity markets is almost there's a term Goldilocks. It's the best of all worlds. Inflation is coming down, growth is reaccelerating,
jobs are stable,
It's what do we have to worry about? There's nothing to worry about. You mentioned companies, CEOs and CFOs, when they reported in the middle of January, took a cautious tone, right? They have to give their annual forecast. A board of a company, CEOs say, what is my projections for the full year? And a lot of banks in the US forecasted a recession to start in the third or fourth quarter of this year. And so that was in their guidance. Just this week, actually just yesterday, I met with a few of the bank CEOs and CFOs. So the Bank of America CEO, I was actually here in Miami meeting with investors, the CFO of JP Morgan, and they now sounded better. They said, look, our probability or chance of a recession is pushed out. It used to be, maybe third quarter going into fourth. Now it's more fourth quarter, maybe going into next year. You know, the 1 month of spending data has been pretty good. It seems like, you know, loan growth is still good. Credit losses are not, you know, increasing, and actually, you know, the Fed funds futures curve is increased, so that gives us more, you know, earnings in terms of net interest income. So the CFOs and CEOs just in 1 month sounded a little bit better. Some companies are forecasting no slowdown or recession. American Express said, you know, we're not seeing it, and you know, American Express is very different, right? It's a different customer base, right? High net worth individuals, corporates, but they said, you know, they're pretty confident about this year. So there is a lot of different variations. So I'll have to wait and see how the year progresses. But it seems like, you know, in just 1 month, you saw a shift in terms of how companies are thinking about this, and it'll probably change as we go through the year. Maybe one final point, you know, CEO of Bank of America, for example, said, even though it looks like the chances have, you know, decreased and, you know, the outlook so far is good, we're still preparing the bank for a slowdown. So, you know, we're looking at,
Cautiously.
yeah, how do we cut costs? What can we do to pare back lending and maybe increase some of the standards so we don't get into a situation where, you know, lending poorly right before a recession. So, you know, there is a little bit of a difference there where companies just want to be, you know, a little bit more cautious, you know, because the outlook is uncertain.
Yeah. And same question that I made to Alejandro in terms of where's the weakness here in the equity space? Like last year, maybe July or summer last year, we were very concerned about Europe going through the winter at some point, all the gas and energy situation. Now things seems to be a little bit, they changed, right? And we are 4,300 or whatever in the S&P space. Everything seems to be very positive. Where do you see weakness in the equity space?
I mean, look, historically, the areas that you see the biggest risk are the cyclical ones you mentioned, right? So banks, because of the credit losses. But, you know, again, I like to stress this when I meet with people, is the banks are different than previous cycles because of the 2008 financial crisis. At least the big banks have to have more capital. They haven't been allowed to take as much risk. You know, where would you see it? Maybe credit card companies, for example, just thinking of broad, you know, because that's something where, you know, if you're taking out credit card debt, it's you know, that's usually a very high interest rate. You know, there's no recourse in terms of an asset. So it's a risky part of the equity market. And then, you know, any other kind of cyclical, you know, housing, auto, those things, you know, when people don't have jobs, they're probably not going to buy a new car, right? They're not going to replace the existing car that they have. They'll let it run for a little bit longer. So those are kind of the areas where you'll see kind of weakness.
It makes a lot of sense. Thank you, Raj. Bernardo, se você não se importar, eu vou te fazer mais algumas aqui perguntas. E, assim, pode parecer básico, ou talvez todo mundo acaba falando sobre alguns temas, e a gente continua escutando sobre soft landing, hard landing, talvez discutir um pouquinho qual que é a diferença na percepção de vocês, porque o conceito é bem aberto, né? Mas na percepção de vocês, qual que é a diferença entre as duas coisas, como que cada um dos dois cenários se parece, e caso a gente realmente entre numa recessão, qual que é o tipo de recessão que está no modelo de vocês? Porque, assim, excluindo qualquer choque externo, como você comentou, que é muito difícil de prever, até defendendo a tua classe aí de economistas. Vamos excluir os Black Swans aqui. O que vocês colocam no modelo de vocês como recessão?
Olha, para diferenciar um pouco a definição dos temas, acho que precisa ficar claro que assim, o soft landing significa você controlar a inflação com uma desaceleração da atividade ou até uma recessão leve, tá? Então, se a gente tem, por exemplo, um PIB de zero, ligeiramente negativo, com a inflação controlada, eu acho que a gente tem que bater palma para o Fed, tá? O hard landing é você precisar de uma queda maior da atividade, um aumento mais significativo do desemprego, podendo até causar uma crise, né? Então, pode ter algum ambiente de estresse de crédito, bem na linha do que o Alejandro falou, por exemplo, uma nova reprecificação de high yield, né? Além do que a gente já viu, entendeu? Então, é algo mais severo, assim, que pode resultar numa crise, né? E só fazer um comentário, porque acho que no noticiário, entre os economistas também surgiu um pouco a discussão do no lending. Acho que no final de semana o Wall Street Journal fez um pouco essa discussão, né? O no lending é um cenário que tem sido discutido, mas na verdade ele é um cenário intermediário, né? O próprio nome já diz, no lending significa que você não pousou o avião. Para você pousar, você ainda vai pousar e não sabe se é soft ou hard, né? Então, Esse no lending que ganhou um pouco de discussão é porque os dados estão muito resilientes, né? Os dados de economia estão muito resilientes, sem a inflação desacelerar. Então, pode ser um novo aperto de juros para você chegar ainda no pouso, não sabendo qual vai ser. Assim. O que a gente está esperando, a gente tem no nosso cenário um soft landing, né? A gente acha que é o cenário mais provável, a gente vê caminhos para isso, a economia tem buffers e a gente vê alguns sinais que a inflação pode desacelerar com uma desaceleração controlada da economia, né? Mas a gente está também no meio de uma discussão de terminal mais alta, né? Voltando a ter revisões para cima na terminal do Fed. E sempre que a gente tem essa discussão, aumenta o risco de hard landing, aumenta o risco de uma recessão um pouco pior, né? Um pouco nessa discussão que o Raj fez, né? Um site bem interessante, inclusive, dos bancos ali, do que eles estão achando. A gente também vê isso nas próprias projeções que os bancos estão fazendo. Eles estão postergando a projeção de quando o PIB vai ficar mais negativo, mas isso não significa que é mais soft landing, significa que pode ter um hard landing mais para frente, né? Pode ter uma recessão mais para frente, né? Acho que é um risco ainda considerável. A gente tem como cenário base, acho que é mais provável o soft landing, mas o hard landing é um risco relevante. Tá?
Perfect, perfect. And it's something that Raj mentioned as well. Instead of the inflation risk may not be fading out, but it's being pushed out, right? We're pushing out a couple of quarters, pushing out a couple of semesters, whatever that is. So that brings me to my next question. Maybe Alejandro, you can take this one. The discussion around Fed terminal rate that Bernardo just mentioned, right? It's been back and forth when the Fed is actually going to pivot, meaning we're going to stop hiking rates and actually start even sideways or cutting at some point. And that's very dependent on how fast we get there, how fast we get to the landing, wherever the landing looks like. So what's currently priced in the market in terms of Fed pivot at terminal rate, Alejandro? And what did that change a lot from the last month or so?
Yeah, that's a very important question, Marcelo. I think the change has been quite substantial. I would say today the curve is pricing in more or less 3 hikes and maybe one cut by the end of the year. First, what is a pivot, right? So a pivot technically, I mean, is when the Fed shifts from hiking rates to cutting rates. I don't think stopping is good enough for a pivot. Pivot is changing direction, right? And why is changing direction important? Because it means a reversal cycle, right? The cycle of tightening has some implications in terms of asset classes, and an easing cycle has some other implications. I think what we discussed before regarding the yield curve, right? The inverted yield curve. Generally, the inverted yield curve is a warning sign, but to really see a recession, you have to see a reversion of that. So a normalization in the curve could be an ominous sign, depending on what drives it and how fast it happens, right? So that's why the difference between a soft landing and a hard landing is extremely important. In both scenarios, you'll see a normalization of the curve, but the normalization of the curve in a soft and hard landing are very different and have very different implications on risky assets. So just to give you an example, we've done some studies on that, and hard landing means that, basically there is an expectation that the Fed will cut, rates dramatically because the economy isn't basically almost in recession, which is not the case right now. So what, the base case that Itaú has, that this is going to be a soft landing, that seems to be more or less what the market is pricing right now. There's a pivot, but the pivot means, maybe 3 more hikes, 525 or so, and then 1 cut, or maybe a little bit more by January of next year, which is not a lot, right? It's just a minor pivot. A month ago, the market was pricing 3 hikes, actually 2 hikes with the recent hike, and 3 cuts, meaning quite an aggressive pivot, right? So we've switched from aggressive pivot a month ago to barely a pivot now. But I guess the critical point here is the studies we've done is the hard landing, which means, the pivot is aggressive, right? They start cutting quite aggressive in the next year or 2. That means that risky assets are not going to perform very well, right? So in a recession, risky assets tend to perform poorly. In a soft landing, risky assets tend to perform well, actually. So if you look at the average, so when the curve normalizes, and it normalizes signaling that there's a soft landing, things should be okay. But if it's normalizes signaling a recession, then things are not going to be okay. So, but when the market says, oh, the Fed pivot will save the day, it's a qualified yes. Depends. It depends on how the curve normalizes, right?
Yeah, I agree. Raj, going back to the equity space, anything else in the discussions, because we've been discussing a lot the macro side of it, right? It's all about inflation and how's the Fed going to react, whether employment will soften up at some point. But anything else being discussed across the meetings and the calls you've been getting?
Yeah, I mean, look, I think a big, obviously, the technology sector is a big sector within the U.S. Equity market, right? The S&P 500. I think a big topic or theme was, in terms around the job cuts that the sector announced. That was to, improve the margin outlook for those companies. They had staffed up very aggressively post-COVID. There was a COVID bubble in some sense. So, you're seeing a reversal of that. So you've seen, pretty meaningful, layoffs, more targeted in the tech sector. So again, it's not spreading outside of that to kind of a systematic, concern for the overall economy. But that was one theme. The second theme, artificial intelligence has been, the buzzword, right? Everyone wants to know what is AI going to mean. Everyone
Chat GTP.
Everyone is using it, trying to see what questions they can ask and what the answers are going to look like. So, Microsoft, clearly is one example because they are, invested in Chat GPT. But I think broadly, investors are asking, what does this mean for your company? One, are you going to be a player? Again, the tech sector is obviously a focus, but even outside of tech, what does it mean for your industry? Semiconductors is another example because all these companies will need to spend on the computing power that's needed. We briefly discussed this in a recent publication of the Weekly Globe, and we're going to plan to have a future kind of events to kind of hopefully discuss this topic. But it is a very thematic area that companies are talking about.
Really is. So that sounds positive, actually. So instead of the dire comments that we're doing about inflation in the market and recession, this actually looks like
in terms of, the noise around every month, whether it's inflation, recession, which way are we going? This is I think for all of us interesting, right? I mean, I think we've all fooled around with it. If you haven't, you can go online and check it out. It's pretty cool in terms of the technology.
Yep. Not 100% related, but we got a couple of questions around commodities that I might want to ask you and Bernardo as well, and from a more macro perspective and on the economy. So last year, a lot of the inflation drives came from commodities. Of course, we can always, several different factors, COVID for sure, all of the fiscal expansion, but commodities were the jump into commodity price was huge. Now we're talking about either recession, slowdown inflation, and China reopening. We can also we discussed that last time around China in the market update. How this whole scenario, in your view, fits with the commodities perspective, and maybe if you want to, I don't know if that's your specialty, but if you want to discuss a little bit about the gold as well. I know Paul Marson has his views, and you guys have been discussing.
I'll leave gold outside of the conversation. I think just commodities generally. We had a discussion last month, like you mentioned, around China reopening. So there is a demand pull that we'll probably see over the next few quarters. Oil, copper, iron ore, steel. And I think, that's the demand side coming from China reopening. The other side is, we have a view that the dollar, can weaken or will continue to weaken, so that will, help commodities. So you kind of have two things that are, positive. The offset in some ways is, what is U.S. demand for certain commodities. But I think we discussed right now the data is good, right? It's not like we're worried about U.S. Recession in the near term. There is a probability around that, but so U.S. demand is probably okay. And then lastly, we discussed this briefly last month at the live. What is Russian production going to look like, right? With the war, Russian production so far has been holding up better than most expected. And so I'll have to kind of wait and see. and see how that kind of progresses. So I think that's maybe the quick summary. I think that everyone is looking at the China demand and how, what is it going to look like? What's the intensity of that demand? And so I think that's going to be probably the big
energy
driver.
And metals, right?
Exactly, copper, iron ore, steel, because the property market and other parts of the Chinese economy were definitely much slower when they were in the COVID shutdown. And again, this was something that the economists last month discussed, and now you're seeing this reopening, and so kind of an increase in demand across the board, it seems like, in terms of commodities.
Bernardo, eu sei também que não é necessariamente a tua especialidade, mas com certeza quando você olha o cenário, quando você olha a economia americana, você resvala um pouquinho em commodities. Como é que você encaixa toda essa discussão de commodities? Pode falar mais geral ou energia, onde for que faça mais sentido nas tuas análises de modelos. Onde é que você vê commodities nesse cenário?
Olha, assim, partindo do que o Raj falou, acho que, a gente não discorda de nada no nosso cenário, e o que a gente tem observado é se, assim, commodities não podem ficar um pouco mais suportadas com esse cenário de reabertura da China, se você tiver junto com isso um crescimento global que não seria tão ruim quanto esperado, né? Então, se a gente está vendo revisões para cima de crescimento nas principais economias, então se a gente tem um crescimento global melhor, com a China reabrindo, não pode ser um suporte adicional para os preços de commodities, né? Só que a gente também olha para a ótica do risco, né? Porque, assim, uma parte da inflação ter desacelerado um pouco, ter feito um pico e começado a desacelerar, que a gente vê mais na parte de bens, uma parte dessa história porque a commodity está num preço bem comportado, num patamar de preço bem comportado, né? Se esse cenário muda, se a gente pode ter um novo choque de inflação via commodities, aí é mais um risco que a gente tem que adicionar para uma inflação que demora mais para cair, entendeu? Então a gente também olha por essa ótica do risco, né? Acho que tem um cenário de suporte de commodities com crescimento global ok, com a China voltando, normalizando. Se os Estados Unidos desacelera, se a economia global desacelera, commodities também não devem ser um risco, um fator de risco tão relevante assim, mas é algo para se olhar, né? Se não ajuda, se volta a atrapalhar a inflação, é mais um risco para adicionar ali para a dificuldade do Fed de atingir a meta de inflação, digamos.
E talvez até a situação de stop and go, né? Do Fed parar o ciclo de aperto, de repente vem um choque inflacionário vindo de commodities, alguma coisa assim, e pode exigir um pouquinho mais de aperto monetário vindo do Fed. Acho que a gente discutiu um pouquinho disso com a Gina também. Não faz parte do nosso cenário base, mas com certeza uma coisa para se olhar. I got a question, Alejandro, and I think this might be towards your direction. I mean, you kind of discussed this a little bit in terms of the terminal rate for Fed funds right now. So the question is, do you think that from what I'm hearing, the probability of a soft landing seems to be the base case here, not only for the market, but definitely within Itaú. Plus, inflation is still kind of sticky. Can that force Fed's hand or Powell's hand to go above 5 as a terminal rate? And we're seeing, I think market is not pricing 520 or 525. Is this your view as well? And maybe that can actually affect treasuries up to 2 years. I'm assuming this is just how long the time horizon for this thing. Is this your base case as well, Alejandro? Now we're probably going to go above 5.
Yeah, I mean, I think the market is already pricing 525. I guess the question probably is the risk if inflation is a little bit more sticky in a soft. I mean, it all depends on what kind of soft landing you think about, right? I mean, there could be a soft landing that it's very softish, which is close to recession, but not negative. There could be a soft landing that's very mild and you still grow, close to potential. But inflation is very sticky, right? So in that scenario, clearly there's a risk that the economy looks stronger than the Fed would like. The Fed will have to go higher, right? Maybe 550, 575, so 1 or 2 more hikes. And would that affect the 2-year? Yeah, probably. I mean, the 2-year clearly now, the 2-year not only depends on how high you go, but how fast do you reverse that, right? Because 2 years includes the cycle between this year and next year, right? So the trajectory from here to December or to January 2025 is what matters for the 2-year. So it is a little bit more complicated than just how high they get. It's also how fast they reverse, right? But yes, clearly that's a risk for sure. I mean, if it's hard to predict inflation in general, and I think this is even more complicated than normal, just because there've been, as Bernardo said, there's been multiple shocks, one over the other, and they're distorting all the data, right? Even seasonality is affecting so many kind of data points. So yes, that's a risk for sure. Yeah, that we could go closer to 6%, and that actually affects the very front end of the curve. That means a further inversion of the curve, right? Again, I'll just clarify that the inversion of the curve doesn't mean that there's a recession. It means that the probability of recession the next 12 to 24 months is relatively high, right? So the inversion of the curve is giving us a sense of the risks, but it doesn't give us a timing issue, right? So the normalization of the curve can tell you if the recession is coming, right? So what we should really fear is an abrupt normalization of the curve. That's what's when it tells you the recession is here, right? Not the inversion. The inversion is more of a warning. That's why I mentioned orange. And maybe it sounds weird to some people, like, shouldn't that be red because it's so negative? I don't think the magnitude of the negativeness or the inversion itself tells you much. It just gives you a sense of risk. Whereas the normalization of the curve is much more ominous. It actually gives you a sense recession might be here, actually.
That's fair. And for my benefit, I know you look at several different curve inversions, but when you say the curve inversion, you're usually looking at what, 2 and 10? What is the basic one? I know I'm oversimplifying, but just for my benefit.
Sure. No, I mean, I think that the normal one is 2 and 10, 2 being the monetary policy sort of indicator, and 10 being the long-term normal conditions of growth and inflation, right? So the normal is 10, and the 2-year is the current cycle. So, how distorted that is means how tight the situation is compared to what it should be, right? But there's even a more stringent one, which is the 3-month, which is almost current monetary policy, right? Like just what the Fed is doing right now. 2-year includes what I was talking about, right? What will happen this and next year. So, but yeah, I guess any of those 2 curves are basically telling you similar things, right? You're very, very inverted, which means policy is very tight, and there's a huge risk that the economy can decelerate, including recession, right?
Yeah. And maybe another one to you, Alejandro, is this is more related to the committee actually. So there's lots of volatility for the curve in general, but for the 10-year for sure. We've been seeing days with 15 bips movement, which is not normal for American market. So we're currently at, I want to call it 380 or something like that, but it's been 340 maybe a month ago. So it's very, very volatile. How do we feel in terms of portfolio allocation, right? Strategic allocation for the 10 years. Are we still, is that still attractive? Are we taking any kind of view in terms of overweight or underweight? How are you playing that in the committee?
So we're neutral at this point. I think there's probably an opportunity if it gets closer to 4. I think there's 2 things that I would look to see if it's attractive for duration. One is levels, right? If we get closer to 4, I think you're being compensated for whatever happens. There's enough carry to protect you. And the second thing is, if the prospects of recession become more realistic, then you want to have duration, right? That's the only thing that really protects your portfolio against, the worst case scenario. So those 2 things, right? Levels, 4%, and potential for, generally what you would think is when the market is too happy, maybe that's a good opportunity to start thinking about, being not as, optimistic, and the other way around, right? So being a little bit contrarian sometimes pays off, but I think at this point, we're not very kind of interested in duration, but they might come a moment where it's more attractive.
Yeah, no, that makes sense. Just to make it clear, neutral doesn't mean that we're not adding any. It just means that we are in our basic allocation, which we do carry 10-year treasuries in the portfolio. We just don't have a view to be overweight or underweight in relates to benchmark. Raj, I know that you look at a bunch of, and I'm going through a couple of questions. There are a bunch of them popping up. I know you look markets in general, but there's a lot of going on in the EM space, right? Do you think that it's more about how do you, I know you communicate a lot with Rodrigo Lopez, which are EM guy for EM strategies for equities. Do you think that can maybe affect Brazil or the EM space as a whole? I understand this is not your.
Yeah, so yeah, I know it's a question that came up. Obviously, like you mentioned, Rodrigo Lopez is the expert on emerging market equities and Brazilian equities. I think there's a discussion around that actually going on as we speak in terms of, we talked about China reopening last month. The commodity question that you also got in terms of, what does the China reopening mean for commodities? And obviously, one, there's the immediate impact is, Chinese equities have done well to start the year. Emerging market equities have done well. And, clearly if the commodity backdrop is good, it could ultimately have implications for Brazil. But, I'd leave it to Rodrigo in terms of, opining on what it means specifically for Brazilian equities. But, you can see there is Brazil is driven in some sense by what goes on with China and the commodity markets. So, hopefully that helps in terms of.
No, it does. Thank you. Bernardo, eu acho que deve ser a última ou penúltima, tá? Porque a gente está chegando perto do horário. Mas eu queria te fazer uma pergunta que eu achei bem interessante. Quando eu olho condições financeiras, né, o quanto que o mercado está favorável ou não para crescimento, para qualquer coisa, é um modelo normalmente um pouco mais antigo. O Goldman Sachs tem alguns que rodam no mercado, o próprio Fed tem. E é uma composição de dólar contra outras moedas globais, taxas de juros em diferentes vencimentos, nível de mercado de ações. Tem algumas coisas que eles colocam lá dentro para ver spreads de crédito, para te dar uma sensação de como é que o ambiente está em relação. Bom, não preciso estar te explicando isso, claro, mas como é que o ambiente está em relação a mais apertado ou mais solto para crescimento. Mas isso normalmente não tem o aperto monetário QE e QT embutido nos modelos, porque acho que é uma coisa que começou nos últimos, 15 anos, desde a crise de 2008. Como é que vocês colocam isso, né? Pensando em condições financeiras ou pensando em quanto que o Fed pode retirar de liquidez ou não, expandir o balanço ou já expandiu o balanço e agora está reduzindo? Como é que me fala um pouquinho do view de vocês em relação ao QT que está acontecendo agora, na velocidade que está vindo e quanto isso poderia afetar?
Assim, eu acho que, bom, primeiro, para condições financeiras, a gente também olha esses indicadores, acho que são bem importantes, a relação deles com o PIB dá um bom guidance, assim, para pensar o próprio cenário do Fed, né? E eu acho que o QT acaba afetando a condição financeira de forma indireta via taxa longa, via juros longos, né? Porque, por exemplo, a Treasury de 10 anos está na maioria dos indicadores de financial conditions, o da Goldman Sachs, por exemplo, né? Eu acho que ele acaba afetou, eu acho que o QT do Fed já no nível avançado contribuiu para esse aperto, né? Eu acho que, a princípio, não é algo que o Fed vai querer mudar ativamente no curto prazo, né? A não ser que comece a gerar algum problema de liquidez dos bancos, etc., né? Eu acho que o Fed vai continuar querendo ser passivo nesse ponto até atingir os níveis de balanço, de reservas que ele quer chegar. Enfim, a gente não sabe exatamente onde ele quer chegar, mas ele já deu alguns guidance de onde ele quer ir. Eu acho que o Fed vai querer continuar passivo, né? uma relação passiva com o QT, pelo menos no curto prazo, né? Acho que pode até acontecer dele começar a cortar fazendo o QT, mas isso, enfim, ele vai querer, acho que, normalizar o balanço nos próximos anos, talvez esse ou no próximo, e acho que ele não vai querer ser muito ativo nisso, mas eu acho que contribuiu para o aperto de condição financeira via taxas longas, e a gente vê isso, né? Mas como o Alejandro falou, acho que o mercado, quando a gente olha esses indicadores, o mercado, de certa forma, precifica um soft land, no sentido que ainda precifica um cenário ok de crescimento, não precifica um cenário mais negativo de crescimento, quando você compara PIB e condição financeira, ao mesmo tempo em que os break-evens de inflação estão muito baixos. Então, as coisas, né, podem não bater e ter alguma correção de financial conditions se a gente for para um juro mais alto ali, né, que é via aumento dos juros, o QT fazendo um impacto indireto ali, entendeu?
Perfeito. I'm going to wrap it up. First of all, thank you very much for you guys for joining the conversation. I learned a lot. I think it was very insightful. I'm getting out of here with a bunch of information, I think soft landing is our base case between private bank and of course you guys in Itaú BBA. I think the discussion around inflation / recession is how fast that's going to come in terms of, are we pushing out this soft landing or not? Always considering the risk of a hard landing at some point, how risk assets and fixed income and the whole scope actually is behaving. So if you do want to conclude with any kind of sense, please go ahead, Raj, Alejandro, and Bernardo. But if not, I think this was very, very helpful.
No, just I'd like to say thanks for having obviously Bernardo for joining us, and we look forward to seeing everyone again next month.
Valeu, gente. Obrigado pela participação. Estamos disponível aí para próximos eventos.
Obrigado, Bernardo.
Thanks.
Thank you, Alejandro. Bye, everyone.
Bye.
Thanks very much.
Bye, bye.